This week I traded the market with more confidence than I've ever had, and no, it was not because I suddenly had a trading setup I've never seen before. No, not that. It was because I had the fundamental analysis handed over to me on the platter of gold without having to do any manual work. In this video, we'll be figuring out how this happened and what this really is all about. So how did I get the fundamental aspect of the market handed over to me like a platter of gold? Well, it is simply because I was able to access a tool called the Edge Finder. Now, this tool is a web-based tool that tracks the fundamental and technical situations of the market in real time. That's basically it. It's a web-based application. So I noticed that Trader Nick was having this free week, and this is not the first time I'm having my hand on it, but the first time I did, it was absolutely amazing. It was well collected. It was the first time I'd ever seen something like that, and part of the funny thing is this tool is the reason why I was able to start looking at creating a dashboard, basically the fundamental economic dashboard which I have and I use on this channel every day. So from the last time I had reviewed this tool, it has had major changes. In fact, matter of fact, it has had way more development than ever anticipated. Let's start with the fact of the asset scorecard. The asset scorecard shows you everything regarding the selected market. You can select the market from here. In this case, I'm selecting the US dollar, and you can see everything regarding the US dollar at a glance, right? You can see the 4 hours technical charts trend. You can see the monthly seasonality, the status of it, if it's bearish or bullish. You can see crowd sentiment. That is whether it's bullish or bearish for you to trade, right? Now, the crowd sentiment is a bit tricky. You're not going with what the crowd is going, you're going with what the smart guys are going. Basically, what people call smart money. Now, adding onto that, you have the COT stance, right? The COT data. What is the COT data saying about the specific market? And you can see the net positioning and the latest buyings and sellings, as well as the economic status, the economic growth, the inflation date, bias, and the job market bias. So all this information put into one spot, right? This all information, they just gathered it and put it into one and then gave it scores, and the final score determines whether a market is bullish or bearish before you go and start diving into it. Now, if it was just this page, right? If it was just this page, it is already a lot. Like, it's already a lot. It has covered a lot of things. However, there's more in this tool. There's more. As a Forex trader, obviously I can't trade Forex just looking at the dollar, come back and look at the pounds. So it already has a comparison space for you called the Forex scorecard right here. The comparison space here already gives you a clear comparison of the two pairs. For example, the British pound New Zealand right now, the technical signal is bullish. Why? Because the current month's 10-year seasonality trend is bullish. The 4 hours and daily trend chart is bullish. The institutional buying says the current net positioning is more for the New Zealand than for the pound. However, in recent weeks, they are now buying more into the pounds than they are buying into the New Zealand dollar. You can also see the sentiment is bullish because the retail traders are looking to short the pair. So it's going against the retail traders, right? It's bullish. This 3 alone has told you there's every tendency this market is literally going up. Why? Because trust me, COT data, they are already looking at the economic stance of the markets before they even start placing their trades. So you just going down further is you confirming your bias, your doubt, right? Now, economic growth, that means the GDP, the PMIs, the retail sentiment, and the consumer confidence, that's the user's confidence, right? They're all majorly bullish in total. Put that into the job market, same thing for the inflation data, as you can see here. Only the CPI and the net positioning is where the New Zealand dollar seems like they are winning. What does this all mean for you as a trader? Well, it simply means one thing. If you were going long in the New Zealand dollar against the British pound against the New Zealand dollar, it is a clear sign for you to end that trade. Even if you're in losses, right? You should end that trade as soon as possible. Why? The economic data, right, is saying bullish. The main traders in the markets are now actually going bullish, and the trend of the chart is now going bullish. Everything is against you. So the best thing you can do is to walk out of this trade. Now I'm going to look at all this whole thing. I'm going to show you a trade I am taking. So I'm taking a trade in the I think it's the British pound US. No, this is the Euro US dollar, right? Yeah, I'm in a trade in the Euro US dollar. And if you look here, right here, so I'm going to pull up the Euro US dollar for you guys to see what it is all about. Now the Euro US dollar, the system says it's most likely bearish, right? It's most likely bearish. Matter of fact, there's a lot more to it, right? It's most likely bearish, but where is the bearishness coming from? Well, looking at the technical stance of the market, it's looking quite bullish technically, right? So these are the things you need to be very careful of. The technical chart is actually bullish. However, the fundamental stance is bearish. So clearly the technical is going to turn very soon. It's the only guy standing here, apart from job market, it's the only guy standing here saying we want to go buying, we want to go buying. The COT data is saying sell. The sentiment is quite neutral because the crowd is even confused. The economic data is saying the US dollar is the better market. The jobs data is the only data where the euro is saying they have a better edge. The inflation data says go for the dollar. I used this to make a trade. And how did I make a trade? Now I've come in here, you've already easily identified what is happening. If you want to actually drill in a little bit further, you can go into the top setups, right? The top setups to see what really, how did those scores come about, right? And you can see it's actually the same thing as the other page, but unlike the first page, you can see all the currencies and the ones that are actually strong, the ones that are actually weak immediately off the spot. So I'm aiming for the euro against the US dollar specifically. And what I see here, it is bearish. Only the trend and seasonality, every other thing is bullish, every other thing is bearish, sorry. And then NFP and unemployment rate. Now, when I go into the charts, this is what I personally do. I'm looking at clear market structure. And what I can see here is I have this low to this high to this low to this high that leads to this low. Last time I checked, I have a break of structure right here. So this range is my view, right? My first purview. The break of structure occurred here. So that's my first purview, right? First place where my eyes are going to look at. I drop down to the daily chart, right? On the daily chart, I'm looking at that same area and I'm just refining. So this is like a refined area for me. The last sets of candles before everything happened, right? So this is my refined area. So what am I expecting? I trade a very specific pattern, right? I trade two ways. There are two ways I trade. I trade the QMRO QMCs. Let me show you what this is. So this is the QMRO. I trade the QMRO. The fact that a trade is going to continue, right? The QMRO is all about focusing on this range. It has a reversal, and QMCs is that knowing that price has broken below this point, we already know that this place, this whole area is a literal selling zone when price comes into it. So basically, this whole area to me is a selling zone when price returns to it. And as you can see right here, what happens on the daily chart is price returned into the zone. Then I'll head into the 4 hours chart. And what did I see that actually made me trade this market? Well, first thing first is this. I saw price returning into the zone. However, the last time price crossed the zone, price did what? Price created a QMR, right? You can see it right here. Let me show you right here. So I have this high, this low to this high. You can see it's take out the liquidity of this high, and then it went down. So I already have the first part of my market, right? And now I'm having the market come back into my zone, into the zone, to sell for the market to return and push even further. And as you can see, I want to squint the chart. You can see how they both start looking alike. Do you see that? I have this price coming back into my zone for a sell. So this is how I was able to use the edge finder to interpret a trade. Now the thing is this, the edge finder is definitely going to end this week. Matter of fact, it's going to end on 31st of March, which is on a Tuesday. But how will I continue if the edge finder ends? Well, I personally already have a dashboard. I had mentioned this before. If you don't know me, well, you could go through my channel. You'll see that I had a dashboard. And this right here is my dashboard. Hold on, sorry. That page was loading the last time I opened it. So something is wrong. I'm going to work on it. Yep, that happens. But this is the dashboard basically. I'm able to not just compare that, but I can also compare the pairs and then do deep dives here. But I don't know what's wrong with it. I'll work on it later to figure out what's wrong with it and do my central bank dives in here. So what's the difference between this, right? This my own and the beautiful edge finder? Well, first thing is this. The edge finder has technical data. I don't have technical data on my chart. The edge finder has sentiment data. I don't have sentiment data on my chart also, right? On my dashboard. However, in terms of looks, it has a very polished look, right? Very polished look. Mine is just black. It's just there. Honestly speaking, it's just there. The data, well, the data for the edge finder automatically refresh, right? It automatically refreshes. That's the big deal, right? Mine is a manual input, right? I have to go out there, get the data myself, come in here, put it in, and then execute it for it to run the calculations by itself. And the last part of it is this is on the web, so anybody can have access to it. Mine, well, you have to actually build it to have access to it, so it's kind of like a personalized thing. The only difference between these two and my tool is that when it comes to economic data, right, because they look at the same set of economic data, the major economic data releases, the GDPs, the PMIs, the retail sales, CPIs, NFPs. Mine looks way deeper than just that when it comes to fundamental analysis. So they are broad. Mine is deep in a specific trench, right? Mine is broad. That's just the difference. So coming back to how this video started, I said I gained confidence in my setup. So how did I gain confidence in my setup? Well, it is simple. Knowing that the economic data is pointing in a certain direction, right? And then adding the fact that you're seeing COT, that is the main big traders trading it, already tells you almost every goddamn thing you need on the surface of the planet of the earth, right? Because even if the technical trend is looking against you, you are already specifically biased. You have a very, very direct bias of what you're looking for in the market and nothing else. Compared to just having economic data, right? I can have economic data. I'll still have to go back to go look for COT data, read through it specifically. Of course, I will still gain the same confidence, but I won't be as confident as someone who can be able to see it all in one go. I wasn't all that sure about the euro US dollar. Matter of fact, I'm going to show you something real good here. You can see that the euro against the US dollar is not so far away from each other according to my situation, right? According to my dashboard. But in the recent 14 days, I can see that the US dollar is literally winning against the euro. Now, if I come to my comparison and I aim for specifically the euro against the US dollar, let's see, yeah, specifically the euro against the US dollar, you can see that they all have bearish stance. However, the only place where I get clear bearish stance is in the recent 14 days compared to the overall or the key news. Well, from their own perspective, clearly the euro US dollar is something you should just be selling, right? Because they've already gotten all this economic and the rest data, but when the time they added the weight of sentiment, they already have like a clear view compared to it. So the thing is that it's not about the tool being perfect. No tool is perfect. Nothing is ever perfect actually. It's just removing those unnecessary layers of extra work, one, and also removing those layers, or rather adding up layers of certainties, things that will make you far more sure of yourself and definite with what you're doing. That's just what it's all about. Now for my final verdicts. Now I'll start by telling you this is not a sponsored video. They never called me someday and said, hey, promote our tool and all that stuff. No, I've talked about this tool times and times again, right? I've talked about it before, but why am I talking about it again? Well, each time I get to use it for a free week, I realize they've made a lot of improvement. I didn't even touch the major parts, or rather a lot of things in this tool today. I just touched on the parts I personally love to use in this tool. The rest of it, I also use those parts, but those are like when I want to have very, very, very deep analysis. Things like going into the PMI, seeing if the PMI, let me just show you. Things like going into the specific COT data itself when I already have a score of it. So things like going into the latest release of the COT data to see the situation of the markets, like actually see if they are really going long or short in the trade. You can see this is the US dollar, this is the euro. You can see that's going in deep. They have things like going deep into the retail sentiment to see what really is the retail sentiment as of now. I can aim for a specific pair, let's say the euro US dollar only. You can see heavily bullish by retail traders. I can go deep, like they have like really, really deep data that you can go into. You can dive into the NFP for the USA, really understand what is happening. You can dive deep into the unemployment rate and dive in. So these are like real deep tools that you can dive in and see. Another thing is they have a history record, which is absolutely amazing. Mine, I can't keep a history record. I can only do a playback by using time frame selections to play back what's happening at the time frame, but I can actually store it like static stored and then do a time over time comparison. It's not going to be easy. I could create it, but it's a long work. Now, why did I tell you about this tool? Like I said, I'm not sponsored. It is a really, really great tool. And my verdict of it is it's one of the best tools you will touch out there. It's better than indicators, if I should be very honest. It's far more better than having an indicator on your chart. Far more better. Same thing with my own tool. Far more better than having an indicator on your chart. Now, I know one big question is whether I will pay for this immediately as it's ending. Well, the thing is, I would have loved to pay for it, but I want to show you something before I do that. So this right here is their website, the a1trading.com. And if you scroll down towards the bottom of the page, you'd see the exact price it costs to get this tool. Now, I'm not saying the tool is absurdly expensive. It's not expensive in my opinion. Expensive means it costs a lot compared to what it can offer, right? So it's not really, really expensive. It is costly, yes, like it costs a lot of money, but it's not expensive for what it does. It is well priced, but I can't afford it. I'm very honest with you. I can't afford it. I'm trading a $50 account, for crying out sake. Where the hell do I see $1,399 to spend? If I had that money, I would have bought it. So if you do have the cash, I'd say give it a buy, right? Give it a buy. Use it. You can decide not to buy it outright. You can do a 1-month demo. I think they have a 1-month demo plan or something. But another good thing is that this is a one-time payment thing. It's not like all those gurus that you pay every month. You pay this once, and every update, every other thing coming through is all yours for the rest of your life. It's all yours. So what does this actually mean for me? It's a motivation for me to continue using my tool and making it better every day as much as I can. Do your best to do fundamental analysis, review the market, review the situations of the market, the status of the asset before you dive into a trade. That's my advice for anybody trading with tools, right? Not just technical tools, but fundamental analysis tools. Build one for yourself, or you acquire one that somebody has and build on top of it. Even if it's there, build on top of it, layer over layer, and you'll definitely become a better trader. Like myself, I seem to have been finding comfort trading with a small account for that matter, and I'm not scared compared to someone who has like thousands or tens of thousands or millions to trade with. So best advice, use it for fundamental analysis. That's what it's built for, and life will be better.